Hey guys, it's Will here. I thought I'd go through quickly the markets and some ETFs and show you kind of what's happening in terms of the charts. So as you probably know, the markets have had a bit of a pullback. There's a bit of a recovery just from where it was. It was over 650 points down for the Dow Jones, but we are down again. So you can see we've been pulling back for a while. So the question would be like, are we going to support at the 21 EMA? And we didn't. And now are we going to support at the 50? And we see Friday it closed just below the 50. And you can see the downward momentum here. There's a bit of a up candle because it went down and now it's coming back up a bit. But we gapped down quite a bit and we're below the 50. So sometimes you'll see what looks like a quick recovery, but it eventually will go back down. So you might want to see it come back up to the 50, and then maybe once it starts going down again, you could do that. Would be a short scenario. But right now, we've had this downward trend. It's not looking great. Dow Jones is even worse. You see we had many days below the 50 and then a big drop here, a gap down. There's some China concerns, Evergrande, like a financial system or mortgages and stuff. But this chart doesn't look good either. Of course, you see these bounces right back up. But if you're using charts and you're not just buying dips, you want to see it above like the 50 in an uptrend or something like that before you get in. But some people do buy the drops. S&P, same thing. It kept pulling back, closed just below the 50, and then a gap down here. So we'll have to see if this sustains itself, but this one is worse a bit because it dropped the gap down here. So these aren't really great from my perspective. Toronto Stock Exchange, we have a drop below the 50 and then also a downward candle. And of course, when these things go down, the VIX, which is the volatility index, tends to go up. So it's still been in a continuous downtrend with the odd spike. So there's not really been any sustained drop in the markets. So we'll have to see if this thing continues to, the markets tend to keep going down at this point. September is notoriously known for being a bad month, potentially a good fourth quarter in October. We'll have to see if that plays out. So most of the sector ETFs that I have are, so in TC2000, if you want to get a free trial or $25 off a purchase, you can check out the link in the description below. I've got the gold plan and I use US real-time data. And I've got different tabs here, so you can have a lot of data in a small section here. So this tab was the markets and the currency, and then this tab is sector ETFs that I've sort of grabbed all the best sector ETFs because I like, you can hone in on a certain sector rather than just buy the whole index. And then within the sector, like jets, for example, you can click on this open component watch list and see all the airlines inside of the jets and pick the best stocks if you want. So of course you've got gold a little bit up, dollar, which is the US dollar exchange. It's been in an uptrend for a little while. There's this hedge ETF. It's a bear. So you've seen that we crossed you sort of can draw a line like a downtrend. And once you start breaking up and having higher lows and above the 50, now we just got to get above this 200. But you can see the active bear hedge ETF is doing pretty well. And you can open up that ETF and find stocks as well that you might want to purchase. So if you want to sort of play the potential downtrends in these, you can buy inverse ETFs. If you don't want to short. So I've got this, I made up a watch list. So I've got a lot of watch lists in TC2000, and one of them is Leveraged Etf. So as I find leveraged ETFs, which are like 2x or 3x, I put them into this list. Actually, I'm going to show, before I do that, I've got another list called Inverse. So under Personal, inverse ETF. So these are just like a few. These are Canadian though, but this is like the inverse of the S&P 500. So you can see now we're starting to get up above the 50, and same with that one. And you've got the NASDAQ bear. So it's not really in a great position to buy, in my opinion. You know, from a chart perspective, you want to see it get up above the 50 here and stuff like that. But there is the VIX and stuff. If you want to get Canadian, there's this cannabis inverse. It's been doing really well. So, but in the States, there's also inverse ETFs. I think I have it over here. Nope, those are the Canadian ones. Okay. So, PSQ comes to mind. This is the short of the NASDAQ in the States. Same sort of scenario. So you get these little blips here, but nothing really sustainable. So you want to see more of an uptrend here. But, you know, we'll see what happens as this continues. The other option is DRIP, Leveraged Etf. So Horizon is a company that has a lot of inverse ETFs, or sorry, Direction is called. And they, you know, they're a little risky. Obviously, they have 2 or 3x ETFs. So if you wanted to, like, if you're worried about the financial system, there's a 3x one. You know, you get these little blips, but we might start to see a more sustained uptrend. If you want to invert the semiconductors, gold, like gold miners have been doing not too great, gold and gold miners. So you see when you broke this downtrend and you start having this uptrend, there's technology, like if you're starting to worry about risk off and everybody getting out of technology. What else do we have? Real estate. So if you start wondering, if the things start to look really bad and the markets are tanking consistently, you can see now we're just above the 50 here. So you can start thinking about these. And these are riskier than just a straight inverse. But the inverse are a lot of times they're more for the main indices. But Direction has a lot of inverse ETFs in the States. So that's all I wanted to say. Just keep an eye out, and you know the markets aren't looking too great. Like I said, they're breaking below the 50-day and stuff like that. And you know they do it. It's been really strong. They've done it a few times, and they continued up. And you know you should start to prepare yourself for some of the inverse ETFs if that's what you want to do, or you could short certain stocks that are in those ETFs. Hope that helps, guys. If you want to get TC2000, again, check the link in the description below. It's an amazing software. I use it all the time for scans and alerts and all sorts of things. Talk to you guys later.